Change is in the air across Oklahoma, and that means a lot of Oklahoma producers are thinking about planting wheat right now, and that actually has a direct effect on cattle prices across Oklahoma. And Derrell, let's talk about what if they don't get the wheat in the ground this fall.
You know, we're at the time of year where if we're going to plant wheat for pasture, we're really up against the deadline for doing that. We really need to have that wheat in the ground by mid-September to get any decent growth for fall forage. Obviously this year we have no moisture to work with. It's pretty unlikely at this point that we're going to have any significant wheat pasture. So that does have huge impacts on our cattle industry in Oklahoma in terms of both numbers and prices potentially. We normally bring in something like 1 million head of cattle into Oklahoma from other states as part of our wheat pasture grazing through the winter period. And this year, of course, we not only don't have wheat pasture, we don't have forage, we don't have hay supplies. So we won't be bringing those animals in, and in fact, we're still sending many of our own animals out of state at this point.
Well, the USDA released some corn numbers that don't look too promising for feed prices.
You know, we continue to see challenges on the feed market. Obviously, the direct impact of these higher corn prices is on feedlots. That translates ultimately into some limits on what feeder cattle prices can do. So we've got all kinds of things going on in these feeder cattle markets in terms of the dynamics of unusual patterns of marketings, you know, lack of demand in the country for the lighter weight cattle for stocker production, and now some limits for feed prices. But in spite of all of that, reduced numbers really means that you know, it's really a trade-off now in terms of whether tight supplies prevails or lack of demand prevails in terms of what's going to happen to prices.
Well, let's actually go into that a little bit. Beef production over the last month or so, how's it been looking?
You know, we've seen federally inspected beef production numbers drop for the last 4 weeks in a row, and that is probably an indication of what we've been expecting all along. In the fourth quarter of the year, we project that beef production will be down about 5% on a year-over-year basis. For the year to date so far, we're still a little above last year, less than 0.5%, but we're going to pull that number down by the end of the year, and we're going to start to see noticeably smaller supplies of beef in the system, and that will very quickly then begin to have impacts at the wholesale and retail levels.
Of course, raising the price on beef on that.
Lots of price pressure there.
Well, let's talk about exports out of the United States.
You know, the trade side has been the one shining star in all of this really for the last year and a half or so. The most recent numbers that we got for the month of July show that trend continuing. We continue to see beef exports up, imports are down. And so both of those factors, of course, are playing into the short run market here in terms of providing some help for the market. You know, there's a number of factors behind that. You know, we think there's underlying very strong global demand. We'll continue to see that be a real opportunity for the U.S. market. Obviously, things like exchange rates and other factors can affect that, and so we have to keep an eye on those factors as well.
Okay, a lot of changes on the horizon. Derrell Peel, Extension Livestock Marketing Specialist here at Oklahoma State University.